bottom line.
Hello and welcome to the Payments Podcast. I'm your host, Owen McDonald. Digital transformation. It's more than a buzz phrase, and each sector has a different experience with it. Take B2B Treasury. Technology is now improving cash visibility, optimizing working capital, and bringing new efficiencies to a new generation of treasurers. The modernization trend in B2B payments is, in no small part, being driven by a reimagined treasury. That's a good thing. But it also makes for a crowded intersection of policy, product, and process change. If your approach is unbalanced, it can drive you backward instead of forward. To share highlights of the more balanced approach, we are fortunate to have Kevin Grant with us today. Kevin is the Managing Director of Treasury Management at Bottom Line. He's a sought-after industry voice, and we're delighted that he's in the studio. Kevin Grant, Managing Director of Treasury Management at Bottom Line. Welcome to the Payments Podcast.
Hey, hi, Owen. Thank you for having me. I'm always happy to share my experiences rather than wisdom, but I guess wisdom comes from experience.
That's very true, and we are always happy to have you. Today we're talking about how policy, product, and process change are reshaping B2B Treasury, Kevin. Can you start us off with maybe kind of a condensed version of how B2B Treasury is being reshaped right now in your view? Maybe a brief summary of the major developments in the sector since the start of the decade, which coincidentally was 2020 when the entire world changed in this respect. Where are things headed now, Kevin? That's about three questions in one, so I apologize.
That's okay. I remember 2000. I was, already just reeling from some of the challenges of the year 2000 chip crisis everyone was predicting, which didn't happen. So I guess the conversation we'll have today, we'll talk about predictions that didn't occur, predictions of risk that didn't occur, and actually being blindsided by risk. So the predictive tools we're using didn't help, right? But I think really what we've seen, there was a drive for disclosure. Early 2000s, the accounting standards bodies were quite correctly looking to bring into financial statements, reporting accounts, the off-balance sheets, derivatives. Now, derivatives are closely associated with Treasury. So these derivatives were derivatives that may have a specific purpose, but the purpose wasn't clear because it wasn't disclosed in financial reporting, and they wanted to change that because we'd seen in the late 90s some of that derivative use had unintended consequences. Yeah. So really that's the change, that it started in 2000, but really accelerated when we had the now well documented and long discussed 2007, 2008, financial crisis. And really my sort of summary of what we've seen since then has been a drive to simplicity, and to bring clarity to what functions are doing within the corporate enterprise of the financial institution, and having those functions, as you spoke about earlier, the functions having discrete responsibilities. Well, they were required to have some kind of guidance of what the responsibility was, and within the guidance were KPIs that would help monitor their compliance with what they're being asked to do, and with every process we through history is well documented. We've looked to utilize technology to help streamline, improve, and audit what people are doing. So I think there's a couple of things I would say. That technology is as pervasive as it always has been, but there is a greater accountability at board level, which is driven stricter guidance on the purpose of your role within the function you have within finance. So technology is there and always driving us to use innovations for business benefit. But I think there's some questions around that. We're actually more critical now about innovation and actually trying to understand the benefit that we can get from it. Yes, we hear things about artificial intelligence. Is it really applicable within the financial sector? I think yes, but more in a B2C type capacity. B2B, I think it doesn't have a particular place at this point in time, but machine learning is being more widely adopted, and machine learning is about replacing human intervention with a rules-based computing power, which will allow for more efficiency.
Right. All right. Well, and that sort of makes me it leads me into my next question, which has to do with trust because there's a lot of systems, a lot of new learning, there's a lot of transitioning going on, and yet trust is in short supply these days, including trust in banks and financial firms. As you said to me, Kevin, what people will trust are things they can easily understand. In what ways can CFOs make Treasury easier to understand, and what are the benefits of doing so?
So this takes me to think about my last 34 years in this sector, just to benchmark why I have the experience to speak in the way I do. If you're making decisions without complete understanding, then you can't trust it. But we've been with fragmented technology globally within institutions, financial or corporate. So let's just talk institution as generic to mean corporate or finance sectors. Incomplete visibility through fragmented technologies, even if you're using the same branded product. There could be different versions. Different versions may not talk to each other. We used to have islands of technology before the adoption of the internet, so it was difficult to share information. But really, in today's world, I don't see there's any excuse for not having joined up technology, even if it's based on different versions of the same platform or different platforms. You can use secure connectivity to consolidate information into a cloud-based platform, whether it's your own self-built or whether it's a third party's. But that will allow you to centralize disparate global processes, i.e. you can centralize your procurement processes, you can centralize your payments processes, you can centralize your cash bank account visibility, combining that with your receivables and your payables, get an overall cash liquidity position, and then make some informed decisions about the needs of your business. If you overlay that with your 90 to 120 day invoicing processes into ERP systems, for example. So try and get more of a complete understanding of the data points, what you're going to receive, what you're going to pay in the next 90 to 120 days, what's in your bank account, should you've received that money, how do you reconcile that, how do you clear down your sales and purchase ledgers. All of that can be achieved through technology, and it needs technology because the volume of data to be processed really discounts and removes human intervention as an efficient means of doing so. So I think when we come to drive to simplicity, it's really about having an understanding of what you're required to do, the processes that you will implement to make it happen, and the solutions you will use to support the people effort that you put into making these things happen. So that drives, and that sounds that may sound complicated, but simplicity is at the heart of what I'm talking about here. Yeah. If you make things simple, you join things up, you can have trust, and then from improved management dashboards, you make better informed decisions, and you're making them with an audit trail as to why you derived and you analyze the data to make that assumption. I face this every day in my own role. It's about not what you think, it's about what makes you think that way. And I often look to data to back up my hypotheses, my expectations, my own forecasts.
Sure. Right. Well, that would be a good reason to explain it to everybody else involved. Talk about being on the same page, right? Now, you've said to me, and I quote, policy needs to provide clear guidance on expectations of the purpose of the function, such as accounts payable DSO, days sales outstanding, and accounts payable DPO, days payable outstanding. Explain your meaning there in the context of payments policy, Kevin.
So I think some of this comes back to, you can ask people to do a good job, but then that's open to interpretation. Everyone wants to do a good job. All right, so let's remove the subjective element to our roles within our financial functions, and it's correct then to look at a policy. A policy that will actually explain the strategic purpose of our function. Example, bringing it back to Treasury. Treasury is often being used as a strategic partner in boardroom decisions around mergers and acquisitions, around how to fund overseas infrastructure investment and development. The Treasury is often involved. If we bring it back to a more simplistic example, if you're in a business with the seasonality, ice cream manufacturers, for example, we know when they're going to sell their ice cream, right? When it's hot and humid outside. Airline or companies, holiday companies, have the same seasonality, peaks and troughs. So it's all about what in the times when we're going to be. So we're bringing it to Treasury context again. I would say that when you know you're not going to be selling as much of your product, you should expect your accounts receivable to be lower, and you may have to have some buffer in your banking relationships in terms of the credit facilities that may be available to you, longer or short term. And I won't go into the derivative side of things because that's not really relevant. That's the Treasurer's role. They decide what's appropriate, or do they actually? And what we're seeing is that someone says there's a Treasury policy also, right? So Treasuries are told what types of credit facilities they can use, the credit ratings of the bank institutions they can work with, the countries where they can hold bank accounts, the mandated authority of those bank accounts. And this is a really interesting thing for me, because you mentioned the word trust earlier, but if we look back to 1970s, which I was around, but I certainly hadn't started school in 1970. But in 1970, the Bank Secrecy Act was introduced in the US. I think Nixon was president at the time, right? But that kind of sets a backdrop, doesn't it? We didn't trust anybody. There was Bank Secrecy Act was put in place then, right? And that's evolved into other things around FBAR reporting. Some of that Bank Secrecy Act was renewed in 2021, so it shows it's still relevant in today's world. Just to bring us back up, we just accelerated past 31 years there of history, which I'm sure everyone was relieved at. I didn't want to talk through it, but what's this all about? It's about making sure that if a US citizen has access, a mandated authority of some sort on a foreign bank account, then they have to do an annual report, right? Because the central governments want to understand these things and want to have an element of control, because we want to prevent money laundering, fraud. So there's an element of control that government wants to play upon us. So let's get away from the government backdrop. What does that mean within business? Well, it means, through the financial crisis, boards no longer have an excuse that they weren't aware of what was going on within their financial operations if there was a financial crisis. So again, it plays into this misuse of derivative transactions, 1990s, but not necessarily only that, right? And it links into the need for the board to have certainty that they will not face prosecution through some kind of financial failure within their operations. If they can be certain that the financial operations are complying to the policy that they put in place. And those policies are not meant to restrict. You could view it as that way. But I think if you actually take a different view and say, well, these policies give me the guidelines I need to know what I have to do when I'm asked to play on the field for my team, for my company. And as long as I work within that, then I'm doing the job I'm being asked to do. It doesn't mean you say you don't look left, you don't look right, you don't suggest improvements, but it means you don't actually act unilaterally when those look left and look right suggest something's awry. You actually have a escalation process and you try and improve the policy compliance through suggestions to improvement of policy. And I think that iterative loop is actually a healthy situation.
I was going to say that sounds like a very good process to have in place in the financial services industry. Last question, Kevin. Actually, no, it's not my last question. My second to last question, because I love to ask you about this thing about the Treasury management system. You're not a big fan of the classic traditional TMS. So what is the tech that you are drawn to, that you do favor, Kevin?
So I'm going to link this to your last question, because you mentioned payments. I don't think I fully answered that for you. But you're in payments, I think it's really important, because there are also in the UK, for example, there's the prompt payment code introduced in 2008. It was a sort of what was it? What do we call? I'm going to call it a friendly regulatory guidance, but non-compulsory is probably another way of putting it, right? But it does have teeth, right? And those teeth were sharpened in 2021 also by the UK government around payments. And it's really to make sure that businesses, particularly small businesses, are not being treated badly by their customers. So an obligation to pay, and it's to not have, payment within 30 to 60 days. If anyone's wanting to read more of it, then just Google prompt payment code and you'll get all the information you need. And really why I'm talking about that is that's where my focus is in Treasury today. It's all about, there's a lot of payments is integral to the capabilities that are required within modern day treasury management systems. Now, some people might say, well, that's okay, we do that. But traditionally, it's been low value, high volume payments that are passing through treasury management systems because they were risk management systems. They weren't payment processing systems. And I can give an example of some of that in a moment. But the current demands today are all around having an understanding of your obligation to pay and having controlled processes for payment. And having controlled processes for payment will make sure that you're compliant with regulatory or non-regulatory external compliance. It will also make sure that you will be compliant with your internal policy around payments. Again, coming back to the board and how policy of payment processing and DPO management is not just about extending your payment terms. It's quite often making sure that your key suppliers are paid on time, because without key suppliers being paid, they will not provide you with the product or services that you then pass on to your own end customer, right? So everyone's seeing this holistic approach now to the B2B market, which I think is really interesting. So without driving into historic TMSs, I think really what today's needs are, you need to have the ability to process all of your global payments and the ability to process all of your global accounts receivable expectations, to be able to have visibility and management all of your global bank accounts, and to turn all of that into a working capital model. Some people would argue that cash trapped in stock should be part of that as well. I concur with that, but I'm just trying to simplify the example. And really, that volume of payments and that global reach is really driving people towards cloud-based solutions. And cloud-based solutions that have the ability to connect into these other back-end systems in a secure way. I'm not talking about API only here, although that's the watchword, and but SFTP is still widely used. But the key point is, regardless of the technology terms we use, it's got to be a secure two-way passageway in and out of those back-end systems into the cloud environment where you consolidate your global receivables, bank account management, and payment management. By doing so and having a product that will allow you to have delegation of authority or mandated processing capabilities, not within one person, because that would be too much power. 4 eyes principles, lots of things. When you have a system in place, when people implement the process and do what they're asked to do to comply with policy, that's forming an audit trail. That can have sentinels that go off and say, well, you can do this stage of the process, but we need someone else from a different department to the other stage of the process. So you build in some governance, and good governance can lead to prevention of fraudulent activity, whether that's deliberate or whether that's accidental. And people will talk about collusion. Of course, we know about that. We know about external bad actors, of course. But that's what new technology does, right? New technology provides you with that external security that will protect you from bad actors externally, and also give you the tools to help you organize yourself in a way that allows your policy compliance through the processes, the people intervention, and the products they use to comply with the process. And the only other piece of that is to say that obviously if we can automate parts of the process, then use technology to do so. For me, that I'm explaining it, but for anyone who understands what the global data capture and processing I'm talking about understands that there's no way that can have human intervention, because there'll be human error and there'll be too much latency, and by the time you've got the information in the dashboard, it's out of date and doesn't provide informed decision making to the management.
Agreed. Well, Treasury wants to retain the best practices of its past while aligning with new expectations. That reshaped Treasury has yet to be fully realized, but we got a good glimpse of it today, courtesy of our guest. Kevin Grant, Managing Director of Treasury Management at Bottom Line, thanks so much for being with us today. To our amazing audience, thanks for listening, as always. Catch us again on your favorite podcast platforms, including Apple, SoundCloud, and Spotify. Bye for now.
The Payments Podcast from Bottom Line.